All right, that was earlier on Business Morning. I had a chat there with Modupe Anjos, and definitely a lot playing out in the real estate market and getting an outlook for what to expect in 2025. Now to our first discussion now on Business Incorporated. We see that ambitious goal there by the Tinubu administration to achieve a $1 trillion economy by 2030. We see financial inclusion is a cornerstone of this vision. Let's talk to Chinasa Collins now. She's an advocacy and communications lead, enhancing financial innovation and access. That's EFINA. Joining me via Zoom. It's great to have you on the show. Good afternoon.
Good afternoon, Ladi. How are you?
I'm fine. You're lucky you're not coming to the studio today. There's a lot of traffic, coming here, so it's better. You're way over there.
Fantastic. just as well.
Fantastic.
It's just that when you do it online, you have to stay in frame, so I can't even gesticulate as
I just hope we don't have internet traffic, with that.
Fingers crossed.
So how is, financial inclusion, playing into this ambition? There's a $1 trillion economy we're hoping to achieve here.
Let me start by saying that the ambition to make Nigeria one of the major economies is, a very, very admirable one. And it's truly, truly ambitious, as you've stated. And, for me, with ambitions definitely comes hurdles. So then there's so many hurdles that we need to surmount to get to that target by 2030. And I don't think it's impossible. It's how ready we are. As Enhancing Financial Innovation and Access, EFINA, where I work and I lead advocacy, one of the things that we're trying to do is ensure that we're able to enable a market that allows everybody to be part of the formal financial services system and basically to contribute to that growth, right? So if I think of the hurdles that the Tinubu administration will need to overcome, and they've sort of highlighted that understanding that financial inclusion is central to achieving this goal. It's the financial exclusion rate, which stands at about 26% as of 2023, when we did our Access to Financial Services in Nigeria survey. And at the recent International Financial Inclusion Conference that was organized by the Central Bank of Nigeria, the governor of the CBN also decried that statistic, saying that it's very unacceptable. And it's one of the things that we need to address, because that's almost 1/3 of Nigerians that don't have access to capital to grow businesses and secure savings and all of that. So to ask the question, how will financial inclusion help achieve this goal? Think of it promoting entrepreneurship and SME growth. If you're thinking to expand the economy, then you need more people producing. What's the GDP per capita, right? So how can we ensure that most of the people that are excluded are included, creating a system that gives them access? So some of the barriers to access is lack of ID. Chief of them is actually regular income. I also know that the Tinubu administration is focused on both financial and economic inclusion, because people often ask, why am I saving or opening a bank account when I don't even have the money to? So it's also thinking of the economic inclusion of these people that are excluded by providing welfare initiatives like the cash transfer from government to at least jumpstart that process, where they can also then be incentivized to be included in the formal financial services.
Right, and talking about access at this point, a lot of Nigerians have been complaining that when you go to the ATMs, the bank ATMs, you're not able to get cash, or maybe you just get a little cash, maybe 5,000 naira, 10,000 naira, which is not enough to use for what you want to use it for. And now we have, the POS operators, they're also complaining that they don't have cash, and that's taking up the cost of withdrawing cash, from POS operators. So how much of a risk is all of this to this whole financial inclusion drive? That's cash scarcity.
You know what? At the end of the day, it's almost like counterproductive, right? So we are advocating for a cashless economy, and want people to use more technology-driven solutions to transact, right? But then you also have this issue where people want to use it, but then there's a challenge with getting access and even using their cash. And I totally agree with you. It would then pose some sort of risk to the goals that we want to achieve in terms of financial inclusion. And all that means is there's a lot of work to be done, even from an infrastructural perspective, in terms of the gaps that exist and the challenges people still experience in trying to use these digital financial service solutions that have been provided. We know that there's work to be done in those areas, but we won't stop to advocate for people to move towards less cash-driven activities.
Right, and hopefully we can have that natural progression where you're not just you have a choice to actually use cash or not to use cash, right?
Well, so yes, it's that sort of the ideal state, but where we want to really be is, why don't you use a more efficient solution, right? If you keep your cash, there's so many risks attached to that. Not that it doesn't serve its purpose, but at the end of the day, we want to use more optimal solutions that serve you ultimately as an individual, and at the end of the day gives you access, especially if you think of people who are most excluded in rural communities. The challenge is usually that they don't have access to the banks themselves, and the kinds of solutions that can serve those people are the digital financial service solutions, right? So yes, the ideal state would be maybe to have a choice, but I think we're leaning more towards adoption of digital financial services. That's our own goal.
Right, and I guess it's also some kind of blessing in disguise, because now if I'm trying to buy stuff at the market, the seller has some kind of fintech and they're ready to receive a transfer at this point. That wasn't like, it wasn't like this, before.
Exactly. But, yeah. And in fact, during the cash redesign issue that we had last year, right? Again, the digital financial service solutions came to the rescue, and a lot of people in those rural communities or in the markets were dependent on the POSs, for instance, and really did come to save the day. But right. We need to do a lot. There's still a lot to be done.
So much to be done. Let's look at the CBN's some of CBN's new initiatives to boost financial inclusion. I guess at a recent event, the CBN announced some initiatives. So what would you say are the potential impacts of these initiatives? And maybe you can enlighten us on what they're planning here for displaced persons and underserved demographics.
Fantastic. Thanks, Ladi. So at the International Financial Inclusion Conference that just held in Lagos, the CBN launched 3 initiatives: the Women Financial Inclusion Dashboard, the Women Entrepreneurs Finance Code, which is called the WeFi Code, and then a roadmap for financial inclusion of forcibly displaced persons. And just to give a bit of context, the reason that these initiatives are important and critical to the advancement of our financial inclusion goal is because if you look at the data that EFINA has provided, it shows that the most excluded segments are usually women and likely to be in rural communities, nano, small, micro business holders. And also then we're finding that even in forcibly the IDP camps, you find that 29% of them don't actually have access to finance. They're also excluded completely. So the CBN initiatives, these have basically signaled the intentionality and targeted approach to ensuring that these priority segments are catered to. For instance, the Women Entrepreneurs Finance Code, which is the WeFi Code, is basically a partnership by amongst different organizations to unlock financing for women-owned and women-led businesses. And we know that if that should happen, if these women have access, then it will contribute significantly to the economy's growth, right? So again, we're excited about what has happened in terms of that intentionality from the Apex Bank to see how that would actually cascade to growth within the priority segments that we're targeting, and seeing how beyond the economy, even those women are empowered and able to contribute meaningfully to society. And as we look towards a $1 trillion economy, because it's all these little efforts that would culminate into like the larger efforts. If everybody comes together and able to help the excluded segments and ensure that no one is left behind, then we're on our way to $1 trillion in 2030.
Right, and at this point, one would look at what we're seeing, right now when it comes to, financial services and all of that. And we did see the CBN governor there decrying, some of the data that you've released, talking about over 26% of Nigerians still stay are still excluded at this point. And also, there's that issue of fraud. And this week, I know it's celebrating International Fraud Awareness Week. So how's all of that playing into this drive, for awareness and financial inclusion?
So first of all, it's good to highlight the 26% of people that are excluded in Nigeria, the 26% of adults. They are largely, like I mentioned earlier, primarily the poorest people living in rural communities, they're women, and basically mostly in the northeast and northwest of Nigeria. And what we found in the last Access to Financial Services Nigeria survey is that financial fintech and basically DFS have been very, very critical in driving the rate of inclusion growth that we're seeing. But then that also comes with its challenges, right? If you think of the people in these rural communities and the digital skills and their literacy levels, et cetera, that they have versus the leapfrogging that is happening within the technology space and innovation around digital financial services, then there's also the risk of what you speak about, which is the exposure to fraud. And so consumer protection is a very big piece of the conversation that we're also advocating for in terms of, as we continue to grow and record progress and see digital financial services drive financial inclusion, there's a need to ensure that, the right structures and processes are in place to ensure that the consumers are protected, because for financial inclusion, as you would know, using any sort of financial service, trust is like a critical currency. And if there's any sort of loss of trust, which could be the experience from a failed transaction or loss of funds, then it's difficult to get that kind of customer back. So consumer protection is a very big piece that we're equally working to advocate for at EFINA.
Right. I know we have a couple of fintechs, doing really well right now, but we're also getting reports that some of these startups are afraid, when it comes to inflation in Nigeria and, the whole currency volatility. So do you see more fintechs, more investment in that space, popping up?
So that's a macroeconomic issue, right? And in terms of the progress and the opportunities that exist within the country, absolutely, the logical expectation would be to see more fintechs because, again, as I said, they're the ones driving financial inclusion as we've seen over the past few years. However, just in terms of the ease of even doing business in Nigeria and having an enabling environment, that's definitely something to consider, and their concerns are not unfounded. So for me, I always say that financial inclusion it's a collaborative effort. Everybody needs to come together because there are multifaceted challenges, both on the supply and demand side, that need to be addressed. So definitely making it's an easy environment to operate in would definitely endear, some of those startups to invest in Nigeria and to basically enjoy the opportunities that exist, because the opportunities do abound.
Right, more opportunities. Thank you so much. It's great having your perspective. That was Chinasa Collins, she's an advocacy and communications lead, enhancing financial innovations and access. That's EFINA. Thank you so much for coming on today.
Thank you so much, Larry.